Good morning and happy Monday. This is PJ Crescenzo, host of Mindset Matters with Team Crescenzo. And today we're going to go over a very important topic that gets asked all the time, and it is, what are closing costs? So I wanted to break this down and just kind of go over what the structure of standard closing costs are when you're buying a home, and then go over some of the variables and different things that can impact how your closing costs could change. So number one, this format is laid out here, and this is standard for all mortgage lenders, no matter who you're working with. And there's different sections on what you'll receive on your loan estimate and on your loan disclosures. So the sections are your origination charges, you'll see services borrower did not shop for, services borrower did shop for, taxes and government fees, prepaids, initial escrow payment at closing, and other. Right? So this is a lot of fancy words for really saying, here's the cost to get the loan. Here are your appraisal costs, things that you have to get that you don't really have an option for based on the transaction at hand. Services borrower did shop for, this is if you're choosing different attorneys and different title companies. Taxes, right? It's our least favorite word to go around here, but we gotta show our love to Uncle Sam. Taxes and government fees. Your prepaids, these are items you're contributing to be collected at closing for your first couple months of taxes and insurance. Initial escrow payment at closing. Other. So to just kind of explain the process, all of this, which is a majority of your closing costs, all of this is standard across the board. It doesn't matter what mortgage lender you're working with. The taxes are going to be the taxes. The insurance is going to be the insurance based on who you select. The attorney fees are going to be the attorney fees. Settlement costs, all of this is going to be standard. Now, when we talk about mortgage lending, the only difference between one lender and the next is this section right here. Origination charges. So the way this typically works is there's a lot of different ways lenders can disclose what their origination charges are. There could be an origination fee, there could be a processing fee, there could be an application fee, there could be an underwriting fee, there could be costs for the rate. So what I want to do is just break apart what you should expect for origination charges, how we like to handle it, and then what our approach to closing costs are in general. So number one, we do not have an origination fee. Sometimes an origination fee can be a lump sum of a lot of different costs. Maybe if you want to buy the rate down, or maybe if there's different things you're looking to accomplish, it can all get lumped into one sum of what's called an origination fee. And it's a cost for the lender originating the loan on your behalf. That's what they're charging you. They're saying, hey, we're going to originate this loan and handle this transaction for you, and that's going to be our origination fee. We do not have an origination fee. Processing fee, underwriting fee, these are things that are standard in your transaction, right? You got a local team, somebody processing the file for you that you're gonna work side by side with. Underwriting, that's the person signing off on your loan. And then the points, right? This is the most, I would say, common word that's thrown out when it comes to buying a house, and it says, what are points? What are my points? Can I pay points? These are all very common questions. So points are just a percent, right? 1 point is 1%. And what that is it's a cost to get below market rates. Now, November of 2022, it is a crazy time in the market. For many, many years in the majority of the mortgage lending industry, there was something that was called a par rate, right? So if you said, hey, what are our rates today? There would be a par market rate, and there would have no points associated with that. That's what the market rate is. And anything below that, customers would have the option to pay points to get below what the market rate is. So for example, if the market rate today is 7%, you could say, hey, I'm really interested in paying points to get a lower rate. Well, I could say, okay, looking at your options and looking at the profile, you can pay 1 point to get down to 6.5, right? That's an example. You're gonna pay a cost associated with getting a lower rate for a higher cost and a better deal. So when clients are shopping and they're saying, oh, this lender quoted me lower closing costs, I always like to say, do you have a loan estimate? Do you have a loan disclosure? Can I take a look? Because oftentimes, we don't like to play the loan quote manipulation game, but they'll put cheaper insurance and lower taxes. And we actually have lower origination costs. So there's a lot of ways to manipulate all of these other costs. So when a borrower looks at their total cash to close, hey, it's lower. Well, you got to see what's going in to get that number lower. When it comes to shopping for a mortgage and it comes to getting a loan, the only section that matters is this origination charge. Now, a quick excerpt on our process is we always like to conservatively quote high on closing costs. Why? Because the only surprises we want on the road to closing are good ones. It's very easy to put together a best case scenario and then in 2 days say, oh, I'm sorry, Mr. Johnson, something changed. But we're under contract and we're closing in 2 weeks, so we got to get you to the table. That is not our process. We want numbers to go down as we proceed, and we want to give education and transparency to the client, right? One of APM's core values, transparency. Transparency, respect, scrappy. We want to embody all of those in this process. So as a recap, what are closing costs? Closing costs are the costs associated with purchasing the property, right? They're the third-party costs. So origination charges tied to who you're using as a mortgage lender. All of these other costs are involved to really the attorney and the title company that's handling the closing of your property, drawing together the new deed, doing a title search, all of these things so you can legally acquire the property. Then you have the appraisal, you have your homeowner's insurance, you have different things that are tied to the transaction. Now, really quickly, I just want to go over here and talk about some of the variables and things that can impact and change what your closing costs are. So number one, the client profile is going to make a pretty big difference. What loan program are we using? Are we using FHA and is there a mortgage insurance premium built into the loan as a fixed percentage? Or are we going conventional? Or are we going VA and is there a funding fee or are we exempt and there's no funding fee? So a lot of times the loan program can make a pretty big impact. Also the client's FICO, right? Because that can impact the cost for the rate and where we're trying to be to accomplish your payment goals. And then down payment. How much are we putting down? Are we putting more than 20% down? Is there no mortgage insurance? Is that going to reduce some of the prepaids and money due at escrow? So you got client profile, you have market, and market is a big one. So we've had one of the most volatile markets in mortgage history with massive swings of up and down, where some days par pricing doesn't exist, right? No matter if you have an 800 FICO and you're putting 20% down, you're paying a point because people are not buying loans and there's going to be costs associated with that. Or we get a massive comeback in the market like we did before Veterans Day last week and rates drop 0.5% in 24 hours. So the importance of the market is working with somebody that's in tune with the market, that knows what's going on, and that can provide you real-time education on what we're saying and where we spend all of our time. And the last one is the company, right? So this is a big one. And really what I want to touch on here is, are you working with a lender that has a lot of lending power? Are you working with a national lender with still a local outfit like an APM? And there's a lot of really good companies out there, and there's some not good companies, right? Just like a plumber and just like a painter. You can find people that'll do a great job, and then you can find people you're not going to recommend to anybody. So really the important thing with the company is you just want a company that's strong, that has a good reputation, that has a lot of lending power. APM, top 15 lender in the country, right, for non-depository institutions. We have incredible services that we can offer all of our clients, and we have local offices spread throughout the coastal Carolinas. So we're really excited about the company we're with. We were with a company before that was also a great large company. Really anybody you know that's large and has a good reputation, as long as they have some lending power, the costs are going to be competitive. Right? We're not in the business of saying everyone that's not us is terrible, because that's not true. But the smaller the company is, the less lending power they have, sometimes the higher the cost. Now, the last thing I'll say is, sometimes we hear lenders say, we have no fees, we have no costs, there's no cost at all. Well, one way or another, you're paying the cost, right? You're either paying it in service, which no cost at all, who's working on your deal, right? We just see, you can Google mortgage news, there's some pretty large lenders that have massive layoffs and long closing timelines, and either way you're paying in some way or another. And then you also have higher rate, right? Oh, we don't have any fees, but the rate's a percent higher than it'd be anywhere else. So it's really important that you work with somebody you trust, that you work with somebody that can provide the education, the transparency you're looking for. I hope this was a good snapshot on all things closing costs, some of the variables associated with how the cost can change, a simple layout of all of the things that go into your cash to close and what your closing costs are. And then the only section that actually matters when it comes to comparing lenders and what the lending costs are. Hope you have a blessed day, a blessed week. Any questions on closing costs at all, please email teamc@apmortgage.com. Probably going to do a part 2. There's just so much content to unpack here, but I hope you have a blessed day, a blessed week, and let's go Team C.